So now we're back on the website again. Ideally, you've already downloaded all these documents, so you don't have to refer back and forth. But for simplicity's sake, I'm just going to keep showing you where they are. Challenge 4, Cashflow Runway. This document is actually a PDF, so you won't be able to edit or type into it directly. You may need to recreate that format. If you do have any issues recreating that format, please let us know. Again, we're available to help you as much as you need help with this challenge. If you just reach out to us, we can review your documents, walk you through individually, or meet in group session to help you complete and better yourself through this challenge. So I'm going to download that document. You'll see that in this case, it actually may show up directly on your screen. If you have any issues about downloading it, it shows up as a PDF. There's this little arrow right here, basically looks like a down button, a download button. If you click that, it will be now on your computer for you to access at any point. Again, if you look at this document, you'll notice that it has a number of different guidelines, has a number of different pieces of information that will help you understand what to do with this document. But as with other things, I am going to jump directly to the example. And we should keep everything that you write to a January to December timeframe. So please, when you recreate the format, please go through and create it as a January to December timeframe. This is another document that you have the opportunity to write a note for. So once you submit it, just remember to include if you have any notes, if you have any things that represent or need to represent thoughts or issues that you're having, explain different components, enter them in at the end of the document so that we can review them and understand your thought process. So getting to the final document, or one of the final documents of submission, Challenge 4, you'll see that the formatting is pretty straightforward. It's just referencing your company. It's going to have the month on the left-hand side. It's going to have the balance or cash gap as the next column. It's going to have the amount or the income or the sources of your revenue in the following column. It's going to have the amount or outsources, meaning the uses or expenses, in the next column. And then it's going to have an area called needed resources or expected resources in parentheses for your cash gap in the final column. Now, the importance of this document is that it reflects the usage of cash in your business. If your business relates to government work or government contracting, the reason that's important is that you may have issues where you're working on something and you have to make something, but you may not be getting paid for that something up front. There may be a time or amount of time that goes past before you actually receive the money that you were meant to receive before the product is finished. So, for example, in government, I might have hired you to make a website. There are costs associated with making that website, but the payment will be due on receipt of that website or due a month or two in arrears of that thing being built. Because of that, it creates an issue for you in terms of funding or creating that thing, that product, for the customer without having the resources currently to make that. So you may have to think about ways of funding or creating that thing that you deliver to the end customer that finances the possibility or the potential of creating that today, even though you're getting paid later. So you may need to take out a loan. You may have to personally invest from your own money, your personal money, into the business to get that done. You may need to consider having an investor for that. Various different ways of making that work. So if you have questions related to the how and why, please let us know. We can get into more detail based on your personal situation. Additionally, if you're working on a technology-related product, there may be instances where you are building a product, people are working on a product, but not getting paid to do so because money does not exist to pay them yet, because that product does not exist. So in the example that you'll see as I walk through it, you'll notice that I have people working on stuff, that are not getting paid because there is no revenue source. Finally, there's also areas of cash gap. Maybe if you're using a brick and mortar space, you're developing or building out your space. There are tangible costs associated with developing out that space, but you are not receiving revenue during that time because the space is not currently open. So understanding and having a budget or having means to continue forth, even though you don't currently have that funding, is important and critical to your success as a business. So as I get into part-time and the elements that we worked on, I'm basically gonna show you that how each of these things works together so that you should efficiently understand how they work for you when you compose this document. So the first column here, month, represents what month we're working in. The next column, balance or cash gap, think of that as your bank account. At the beginning of the month, you have a dollar amount that's in the bank account. If you're brand new to having a bank account, you've probably deposited something in there. A business holistically should have separate finances from personal finances. If you haven't done that already, you should definitely get to doing that as soon as you can. For accounting purposes and otherwise, it's extremely important to your business, but I won't dig in too much to that. So as I start the business, I've invested a certain amount of money into this company. $50,000 came out of my personal finances to help start part-time. So I put that in its own account. If you were to look at the balance of that at the beginning of April or when I put it in, it would say $50,000. Now I made no money during that month because I had no product. So you'll see that zero goes into my income, but you'll see that I did have to pay people to work on the product. $15,000, the money in parentheses, went to my team salaries. Now I had $50,000 at the beginning of the month. I spent $15,000 on my team and my salaries. So at the beginning of the next month, I had $35,000 in my bank account. You'll see it's very simple addition and subtraction. Should make perfect sense to you, hopefully. If you have any questions, again, please let us know. At the beginning of the next month, I had $35,000 in my account. I won $30,000 from the Tech Fuel Award, and I spent equivalent $15,000 in that next month. So if you look at June, you'll see that $50,000 is the addition of 35 plus 30, or excuse me, let me back up. 35 plus 30 is $65,000 minus $15,000 equals $50,000. You'll notice that for this example, it is very superficial. I am not going into other accounts, other income sources. I'm not breaking it down, but you should. So if you have segments of money or cash flow, like you sell, call it juice, and you sell coffee, and you sell cake, ideally break it down into product categories, at least the top 3 for this document. So if I was to write that down, it might say, beverage products equal this much in revenue, pastries or food products related to this much in revenue, and then maybe my third category was I sell t-shirts at my juice coffee shop. That might be product level 3, and you'll see that at the bottom. That's my third level. Anything else you can list out as maybe miscellaneous or other revenue category. Take a deeper look. The deeper you go in, the more valid you make this document for the reviewer, and the more tangibly they believe you've thought about what you're doing. The same should go for expenses. So I know that part-time did not only have team expenses, they also had maybe hosting expenses or overhead if I was renting an office or a number of other things. Try to be as critical as possible about your in-sources and your outsources and listing them out, but categorize and bucket them as much as possible so that you have that opportunity for brevity. So as I continue down, you'll see July comes up. My salaries have increased because I hired a person in June, if you remember the other documents. That person had a high cost associated with them. My salaries went from $15,000 a month to $35,000 a month. And because I did not make any money in June, I have to subtract my expenses from my balance at the beginning of the month. So $50,000 plus nothing coming in minus $35,000 equals $15,000 in my account. Once I got to July, I actually started making money. So you'll see $7,500 in customer revenue. You'll see that my team expenses had to decrease, and you'll see how that works out once we do the math. So I had $15,000 in my account at the beginning of the month. I made $7,500 at the beginning of, or during that month. That equated to $22,500. You'll notice that in the previous month, my team expenses were much higher than $22,500. I did not let anyone go. I did not have the capacity, meaning the cash, to afford to pay $35,000. So in that needed resources or expected cash gap, that is where I explain how I am going about solving that monetary issue. So I deferred my own salary for that month in order to keep the company running. So everything equal, we had $22,500 of money available. We spent all that on the remaining team to keep them working on the product and the project, and I did not pay myself, which equated to August having $0 in the account and a new situation to deal with. So if you look at August, you'll notice that we made $12,500 in revenue. You'll notice that there's a $10,000 loan there, which you'll see explained in the needed resources for gap. And then we still had the equivalent $22,500 in team salaries. So if you look at the explained gap, I again did not take money from the business, and I loaned money to the business at $10,000 that month so that I could continue to pay my employees. For you, that may represent in a number of different ways. If you add a loan for equipment, you may have a lot of money come in the door in terms of that money from the bank to purchase that equipment, but you'll also probably have an equivalent expense that relates to the amount that equipment costs you. So again, thinking deeper about where you're using cash in the business. That gap may be fixed with a loan. It may be fixed with a loan from a bank, a personal loan, of finances, an investor. There are various many ways that you can fix that shortfall. But ideally, you're getting to a point where revenue fixes that shortfall. So as you continue to go down, you'll notice that I had the same problem month over month. My revenue increased, but as I expanded into other markets, that revenue continues to go up. There's less of a need for me over and over and over again to continue to contribute that loan back to the business. So by October, I've actually increased my customer revenue to $20,000. I've loaned $10,000 to the business just to continue to have that buffer, and I've spent $22,500 on my team again. When I get to November, I now have $7,500 worth of money in my bank account, and my revenue, which has increased to $20,000 again, is now going to cover my team salaries for that month. I personally will not be able to take money for myself, but I no longer have to loan money to the business for my operations. So $7,500 plus $20,000, that's $27,500. You see that together right here. Minus $22,500 for team salaries equates to $5,000 in the bank in December. Now in December, I've been able to launch and execute on all of my partnerships, all of the different aspects of my business. I was able to increase my customer revenue to $50,000. And because of that, I no longer had to loan money to the business, and I no longer had to not pay myself as part of that business. So $5,000 at the beginning of the month in my account, $50,000 of earned revenue. Added together, that's $55,000 minus, going back to what I had at the very beginning in June, $35,000 into my team and paying myself. So if January was to show up, you would notice that I had $55,000 minus $35,000, which would equate to $20,000 at the beginning of January. You'll notice at the bottom here, I leave a note that explains why we did not have any money in the account. We were working on our product, and in order to pay our developers to continue to do that, we needed to pay them, and I deferred my salaries. We were hoping for rapid market expansion, but we did run into some deficits prior. We hired that full-time salesperson, and we let them go to expand our market. We bet on the sales to drive our revenue growth, and eventually we did break even. So again, on that note, just remember, you can explain your situation. I do encourage you to be as realistic as possible. Understand that because this is an example, the details are probably not as specific as they could be. I encourage you to try to be more specific than the example. And again, if you have questions, please let us know. So that concludes challenge 4. That is the last document-related challenge that you'll actually have to submit. The next 2 components that you'll be submitting, which represent the entirety of the challenge, are the video and the pitch deck. The video and the pitch deck can both be can both be seen in terms of their content or what you need to compose in challenge 5 video plus pitch deck. Now going back to the website, if you see it here, you'll be able to see all of the information related to that challenge. You'll realize that it's extremely brief because the components pretty much are all of the skills that you've learned in 1, 2, 3, and 4, and really are composed somewhat separately and have a different purpose than 1, 2, 3, and 4. So you can read through all of the descriptions here. The video, again, is only a 2-minute video. The quality of the video is not as important as the content, and it's really about how well you can explain what you're doing and how you're making money. The pitch deck should be focused in terms of the one that you give to us prior to, the video that you submit to us back up. The pitch deck that you submit to us should be focused on 10 slides related to your venture and will be submitted to us in a reading format, not a presentation format. For more information on the composition of pitch deck and video, we actually have supplemental materials that say pitch deck guidelines listed on the site. If you click that, it'll open up another PDF document that will articulate to you all of the slides, their usage, and everything that goes in there in a more visual format with examples and tangible information. Again, when you submit that pitch deck, you just need to submit a reading version of that deck. That means that it will be more thorough, more word-heavy than more visual. If you are selected as a finalist, which we will announce towards the beginning or middle of May, you will have the opportunity to then present a pitch deck, meaning a presentation deck that will be more visual, and you will be using that to present to our judges in person. So if you have any more questions related to the pitch deck, the video, all of the other challenges, please get in contact with us at LaunchSA. You can do so by emailing us at team@launchsa.org or giving us a call. That represents all of the information that we have available for discussing how to produce the documents for the Venture Challenge program. Again, if you have any questions, we hope that you follow up with us. We hope that you participate in this year's challenge. Don't forget to register, and we look forward to working with you and helping you achieve your goals. Thank you.